Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, the regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me this afternoon, we have Chuck Fuller. He's a portfolio manager at Nasdaq Dorsey Wright, Mark Marex, Senior Director of Index Research and Development at Nasdaq Global Indexes, and Michael Tanney, Senior Managing Director with Magnus Financial. We're here to discuss asset class rankings and trends in market breadth and seasonality, as well as 2025 outlook and the Nasdaq 100 reconstitution, which recently took place. Gentlemen, it's great to see you as always. Welcome back to Trade Talks. Mark, let's kick this off with you since the Nasdaq 100 reconstitution is fresh in our minds. Give us some insight from the reconstitution that recently took place.
Yeah, sure. So, we made the results public after market close last Friday. Everything's going effective after market close tomorrow. So Monday morning, you'll see the index officially reconstituted, and it is kind of a strange one this year, I will admit. There are only 3 companies cycling in and out of the index. We've got Palantir, which of course switched its listing from NYSE to NASDAQ in late November, sort of snuck in right before the cutoff for the reconstitution. It's a $170 billion company, up more than 300% this year. Really a typical Nasdaq 100 type of company, so definitely deserves to be in there. Just definitely kind of skipped the line in front of a few others that we've been keeping our eye on heading into late November. Then, of course, the headline was MicroStrategy, right? They're up over 500% year to date, given all that they're doing in terms of their Bitcoin investments. Really skipped the line, right? Didn't even spend time with the Nasdaq Next Gen 100, which is the next 100 largest companies after the NDX. So that's number 2. That one's also at almost $100 billion market cap. And then number 3 was out of the Next Gen, Axon Enterprise, also up over 100% year to date, had a really fantastic November, about a $50 billion company. That one, unlike the other 2 that are tech, is technically an industrials company. So those are the 3 names coming out. Supermicro, unfortunately, right, joined the index earlier this year, had a bit of a rough go of it in terms of some reporting and compliance concerns. They're out. Moderna's out, which came in a few years ago during COVID, down about 60% year to date. Really rough headlines for a lot of names in the vaccine space since the election. And Illumina, another healthcare name, another biotech stalwart that's been in the index for years and years. Their market cap's down to 20 billion-ish, and that just ain't cutting it anymore to be large enough to be in this index at the end of 2024.
Yeah, it's like only 20 billion. So it really does show you the growth of the names within the NASDAQ 100. Chuck, let's take a look at asset rankings. No surprise here, equities still remain in the number 1 spot.
Yeah, they're still in the number 1 spot. Even given yesterday, one of the worst days we've had in the last couple of years at least. And really for us, the yesterday didn't change much. The trend is still positive. Overall on U.S. markets, we're only about 3.5% off the highs, which isn't much at all. I think the one interesting thing though that is happening is that breadth isn't quite where it should be, given that we're only 3.5% off the highs. When we look at it right now, only 20% of stocks in the S&P are above their 50-day moving average, and actually that's the lowest we've ever seen it. With the market this close to the high, going back to 1990. So there's this kind of divergence where, and you can kind of see it too in just the market versus the performance of the average stock. So, even though, like I said, the market's down 3.5%, the average stock in the S&P is now about 17% off of its 52-week high. So, again, just kind of shows you there's this bit of a disconnect going on. I will say those kind of disconnects do tend to precede, larger pullbacks. So, it wouldn't surprise me to see the market, start to move down even more. Chances are we're a bit oversold, on a lot of measurements, where we are right now. And so my guess is that we have some kind of, snapback rally. I don't know that today really qualifies, but, maybe a bit more of one over the next couple of weeks. And then it all kind of depends on what happens from there. If we get back to new highs and, breadth is at new highs, then we're probably fine. But if the market starts to kind of turn over before getting to new highs, or maybe it does, but breadth doesn't quite, make it back up, then we might be talking about something, a little bit more severe over the near term.
Yeah. And Michael, I want to get your perception and what you're hearing from clients, because it was interesting. On Monday, I was speaking with my Uber driver and we were talking about the new administration coming in. And his perception was that with the new administration, that the market and the economy will, get firing back on all cylinders. And I had said, well, the S&P is up 28% on the year. The Nas is up 33%. Again, this was on Monday, so forget about the pullback yesterday. And for all intents and purposes, the economy is doing well. So there is really a disconnect in terms of perception with what the numbers are saying and how people are feeling about their portfolios, despite the fact that they've done well. What are you hearing from clients? Are they making the same sentiment?
Yeah, so yesterday, real quick, going into the end of the year, I think it was the 17th or 18th day that we had a down market more than 1%, which is like less than half the normal, right? So it's been a quiet year, quiet on the upside too. Excuse me. But I think I don't let politics affect my investment decisions. The caveat to that is there is a lot of ego in this round, and that's hopefully good for everyone because we want whomever it is who won to continue to win and we all benefit. So I think there's a huge, huge pressure, self-imposed, to succeed and show success before the midterm elections, which would point to a very positive outcome over the next 18 months or so across lots of risk on assets. So with clients, we've been taking profits. Hogs get slaughtered, as they say, but you still leave your money on because market timing is impossible, literally. So there's a lot of tailwinds that make a lot of sense outside of exogenous factors that we can't plan for.
Right. And it's interesting because this administration, if Trump 1.0 serves as a guide, he benches his performance on the market, the economy, being a leadership when it comes to innovation. And now he's adopted a pro-digital asset stance. So perception-wise, that's a tailwind, I think. And from what we've been hearing with strategists joining the show is we know how he wants to get from A to B. And this is with any administration. It's the execution of and how that happens. And of course, the charts aren't always going to go from the bottom left to the top of the right indefinitely. And there will be some bumps in between. I think we need to set expectations that we have to get through the first 100 days and bench performance against that and see how policies, tariffs, taxes, and so forth, what that execution looks like. And I think that's reasonable.
Totally. And you talk about digital assets and you talked about how MicroStrategies is now part of the Nasdaq 100. And I just stopped for a second and stepped 30,000 feet back and say, wow, think about where we've come in just less than a year. The beginning of the year, you have an ETF that's launched for Bitcoin. And it's the most successful ETF in the history of ETFs. And then you fast forward and you have, whether you feel like MicroStrategies is doing the right thing or not, we have a Gordon Gekko of our moment here with Michael Saylor. Let's call him what he is. It's a derivative of a derivative, but it's exciting. And you have something that's now in the Nasdaq 100, which is, I think it's $500 billion of passive assets. It's just like money that comes in. So you have this legitimization of a space that was far off from that a year ago. So you're seeing things moving a lot quicker, a lot more exciting. The question is a MicroStrategies a meme stock or is it not? And obviously no one has the crystal ball, but the idea that the perception is shifting and people, I think there's a bigger thing happening here. If you want to take a really big step back, you have a generation that's lost. And I don't mean that morally. I mean that economically. You have a generation that's priced out of housing. They're straddled with straddled with student debt. And now you have AI coming in and saying, well, I'm not sure we're actually going to need you. So they're really upset and angry. And you could talk about maybe that's part of the political world too. But you also could see how people say, you know what, instead of running around and fighting, I'm going to push stocks higher. I'm going to put my money in motion and put it back to the man. So you have these dynamics that are really interesting that are not technical in nature, but you have to accept that something's going on. And then you factor in like old school GDP growth and all these things. And now you say, well, can a YouTuber who's generating revenue, sitting in Japan, but using a US company to do it, like where's that GDP even located anymore? So there's these bigger tectonic shifts that are happening that I wish my crystal ball could tell me how to play them correctly for clients, but I think you have to understand that there's something bigger changing.
Yeah.
So it's
Yeah, there
exciting.
certainly is. And Mark, we've heard that, why is MicroStrategy in the Nasdaq 100? It's more of a blockchain or a crypto play. This is an AI company that services a business intelligence community. They've written white papers on data integrity, ethical AI implementations, cyber, the responsible use of AI. Because they've made interesting investments when it comes to digital assets, I still think we have to recognize the core business of what MicroStrategy does, and it falls directly in line with the companies in the Nasdaq 100.
Yeah, I mean, look, I was paying attention to some of the threads that were going on in the week leading up to the announcement on FinTwit, talking about, is MicroStrategy in? Are they out? Should they be financials? Should they not be? The bottom line is that the Nasdaq 100 is a rules-based index, right? It is fully systematic. We don't have a committee that sits behind the index methodology like with the S&P and the S&P 500 and decides, well, this company isn't profitable enough to join the index. That's actually what happened with Tesla for about 10 years, keeping it from joining the S&P. Meanwhile, it was compounding in the Nasdaq 100 at something like 2,500% over that time period. So MicroStrategy, super interesting, obviously, in terms of how that turns out. It's not a huge part of the index. I think it's around a 0.4% weighting these days. Despite being about 100 billion, that just speaks to the depth, right? The concentration of the biggest companies on the planet being members of this index. And it's considered a technology company for now, right? FTSE Russell, they run the sector classification system that we use, also known as ICB. Maybe someday they decide to reevaluate what MicroStrategy is. Is it more of a financials? In which case, it would not be eligible for the Nasdaq 100. But for now, we are fully rules-based, systematic, always have been, always will be. Not a surprise to me that they got in.
Yeah, and a lot of these lines are blurred too when you think about digital assets and AI, right? I mean, they go hand in hand with each other. It's almost like Amazon. Is it a consumer company? Is it a tech company? You can make the same argument with Apple. So it's really interesting to see how innovation and emerging technologies really does impact cross-sector. And the Nasdaq 100, certainly, as you always say, the modern day industrials, Mark, I think is a great exemplifier of that. Chuck, I want to go back to you for a moment here as we look at some factors. Of course, the question is the momentum that we've seen in the end of the year, and of course, our seasonality attached to that going into 2025. And you alluded to this before. Can that momentum continue? And the second question to that is, are you seeing any leadership changes among the asset classes besides equities?
Yeah, I mean, I certainly think that the momentum, can stay up. That's kind of what, Dorsey Wright's bread and butter is this idea that, momentum can keep going on for long periods of time. Of course, you never know when that's going to turn around, but I think you always got to, place your bet on momentum. Within, are we seeing any changes in asset classes? We're seeing a bit of a change in the last couple of days. International equities has been number 2, a long way away from number 1 in the US, but still kind of holding on strong at number 2. But we've seen it, kind of move down a little bit here of late. Places like Brazil, really all of Latin America, aside from like Argentina, have really had some severe problems this year. I think the overall space is down over 20%. And so that's kind of dragged that area down. And it's getting to the point where commodities is getting ready to overtake it, or it seems like it will in our rankings. But with at least within the U.S. space, we haven't seen a whole lot of changes. Financials, kind of remain the number 1 sector that we have. We have seen technology kind of move back up into the number 2 spot. It had fallen to number 4 as recently as just a couple weeks ago. And so, that's been good to see. We have what communication services is number 3 and industrials at number 4. So really, if you think about all those sectors, they're kind of bull market sectors, right? We're not seeing anything like, consumer staples up at number 2 or, anything like that. And so certainly I think that the momentum is still in the places that it has been, at least for now.
Yeah, I mean, certainly if you see IPO and especially the secondary market pick up as the broader expectation is, certainly bodes well for the financial space. Michael, let's go back to digital assets for a moment here. Among your clients, are you starting to hear more interest, whether it's digital assets or alts more broadly?
Yeah, once not to get political, but Trump was very pro crypto and Biden wasn't for a long time and then flipped at the last second, or I should say the Democrats flipped at the last second, and I think was a little too late. So you had this euphoria, you had this excitement, and the excitement is not that the technology is here and it's ready or it's solving a problem today. It's that there's actual clarity that businesses, incumbents, a lot of the Nasdaq 100s can invest in these now. They can invest in them with clarity that they know they're not mixing something up. So just the clarity in direction and scope of the idea that we're now in an environment and a regime that's pro innovation versus anti a little bit. And that's the sense I get. So a lot of clients have come out of the woodworks the last 2-3 weeks and said, I'd like to own some Bitcoin. They haven't asked me anything specific. And I actually think infrastructure is a smarter long-term play. And I think a lot of the Nasdaq 100 companies offer you tangentially that exposure. That's the whole point, right? The innovation and future growth. But what I've seen, though, is that if you think about it from just a Bitcoin perspective in a vacuum, the world stock market's 120 or $110 trillion in market value, right? The US is like 55, 60. So we're the elephant in the room, and we are constantly getting more and more inflows from international. So the tailwinds are tremendous in the US in the big picture. But then you say, well, I'm not really sure what Bitcoin is or why I would own it. But even if you just look at it and say, well, 110 trillion market, 55 trillion US, gold is 17 trillion, Bitcoin's 2 trillion. You could be a quarter of the way right and still 3 to 4x your money as it gets closer to a gold kind of comparison. So I think there's so much potential, and people are starting to understand that there's something there and they want to have some exposure to it. They are very reluctant to go all in. So we've allocated 1-2% when people have asked on purpose. I could see this becoming a longer term, bigger strategy with infrastructure and some other investments, but it's a good start.
Yeah, it is, Michael. And you and I have spoken about this on blockchain and digital asset panels separately at MarketSite. I think what we need to acknowledge is we tend to think very US or Western centric in terms of Bitcoin as a way to either hedge or speculate as a store of value. But the fact of the matter is digital assets, whether it's stable coins or other types of digital currency, couple billion people around the world use that to transact, whether it's cross-border payments, whether there's stability when it comes to inflation with their home currency. This is how local microeconomies are being built, number one. Number two, it's alternative forms of capital formation. And we, from an innovation and market infrastructure perspective, we want to maintain our leadership as the place to be for global capital markets. So I think getting that framework and legislation around digital assets more broadly has bigger implications than just the investment or Bitcoin spot ETFs. I think the products are a derivative of the larger capital market story. And I think we need to do a better job in communicating and advocating for that.
I couldn't agree better. And I think it starts with clarity on regulation so that you understand, there are a lot of concerns about cryptocurrencies and so forth. And I understand where they come from, but they're no different than paper money. It's when you think about it really big picture, I like to stay big picture. We're in a world where the last 20, 30 years has been focused on making the front end of everything we're doing feel better and modern, but the back end is still the same from the 1800s. So you're seeing the back end starting to come and get reworked, which is exciting. And there are huge opportunities, huge potential in a deglobalized environment, which we're definitely in, right? The last 40, 50 years was all about globalization, and now we're deglobalizing. I think the US is set up to be unbelievably even more powerful from an economic perspective because of this enhancement and innovation. And you obviously have other factors that Chuck and Mark have talked about on a technical basis. But when you look at it that way, regardless of momentum, regardless of where the stock market is, it's an exciting time to be in America and in our economy. And I do think, and I know this is a NASDAQ show, and I'm not plugging NASDAQ for this reason, but the NASDAQ indices give you exposure to a lot of this future growth, and you don't have to guess the winner, right? So maybe you don't like MicroStrategies. Okay, it's 0.4% of the weight, but you have it, right? And you're participating in it. And that's the point. And I think if people take a step back and just embrace that things are going to change, it could be pretty exciting and scary, but exciting.
Yeah, well, certainly innovation in indexing is something to look forward to as we have, emerging asset classes happening in real time now. Gentlemen, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at